Let's look at the inventory recording systems. There are two systems. One is called the periodic inventory system and the other one is called perpetual inventory system. Under the periodic system, as the name suggests, inventory is taken at the end of a particular period. You physically take the stock and whatever you get is considered as stock. And the alternative is the perpetual recording system, where your accounting system, your billing system itself records for inventory movement. You have seen in malls and all, they have these, what do you call it?
Barcode scanners.
Yeah. So that itself will facilitate the value of stock whenever you want, the system will tell you. Now, what's the major difference between the two? Okay. Suppose you have staff who do pilferage in the steal. You will not come to know about it at all. Okay. Because you start with the opening stock which was counted physically, you end with the physical stuff which is counted physically. So it doesn't make a difference, you won't know. The losses will be covered up. But in a perpetual system, the system will say there should be 10 pieces of item X. So you can go to the X shelf and see there are 10 pieces or not. You can identify the losses. Of course, physical period is simple, doesn't involve much of cost. Small people can do that, medium traders, small traders can do that. The cost of goods sold is a residual figure under periodic system. The cost of goods sold is a residual figure under the periodic system. That is, opening stock plus inventory minus closing stock becomes your cost of goods sold. But in a perpetual system, the closing stock is the residual figure, opening stock plus purchase minus cost of goods sold. This is the big difference. This is the correct difference between the two. The perpetual system is more expensive. It involves software and hardware, and maintenance of the software and the hardware. So it becomes an expense for the organization. But large organizations do keep such systems. There was one question which came for the examination in November 19. There is a difference between periodic system and perpetual system. I put that up there. It is there in your material also, which is an important question. The accounting standard disclosure norms are four. One, you should mention the accounting policies adopted while valuing the inventory. What is the cost formula used to find out the cost of the inventory? What is the total carrying amount of the inventories with the classification of the inventories? This is what is required as far as disclosing your financial statements is concerned. Now there is one question which I would like you to pay attention to, is this specific identification method. Zishan,
Yes, sir.
I read this question.
From the following data, calculate the value of stock to be shown by the group by group method and the item by item method. So there are 6 columns and 1, 2, 3, 4, 5 rows. Each column has article, group, number of units per unit, cost per unit, realizable value, realization expenses. The article stands 1, 2, 3, 4, 5. Group A, B and AB. Units 100, 200, 300, 400 respectively. Cost stands up to 100, 200, 150, 250 respectively. Realizable value is 120, 200, 156 and 290. And realized expenses for B is 10%, and another B is also 10%.
Thank you, ma'am. Now, what do you mean by this? What do you mean by group or item by item? There are 4 articles, not 5 issues. There are 4 articles, 1, 2, 3, 4, but they belong to particular group. So 1 and 3 belong to group A, 2 and 4 belong to group B. Our basic approach, what does the accounting standard say? Accounting standard says inventory shall be valued at cost or net realizable value, whichever is less. That is the first rule. The second thing it says, you should not take the valuation under group, you should follow for item by item. This rule should be applied for item by item and not by group. So we try to understand what do you mean by group and what do you mean by item here. Okay. Now, first and foremost,
മാഷാല്ല ഇതിൽ കേൾക്കിച്ചണ്ട അപ്പൊ ആ ഇയർഫോൺ പ്രോബ്ലം ഞാൻ ജനറൽ ക്ലാസ് കേട്ടിട്ടില്ല ഇതിൽ സർ വോയിസ് ചന്ത കേൾക്കും ഈ ഇയർഫോണിൽ.
thank you, Shocking, for the compliment, but I have muted you. Accounting Standard 2 requires that the rule, which rule? This rule should be applied on an item by item basis and not group by group. Okay. We'll talk about group A first. Okay. Under group A, you have item 1 and item 3. Okay. What is the total cost? 100 into 100. That is 10,000. Similarly, for item 3, units is 300, cost per unit is 150. So that will make it 45,000. Okay. Now, this is the cost. This is the NRV. Okay. Realizable value they're saying is 120. So 120 into 100 will be 12,000. And third,
$46,800.
thank you. You follow? When you compare this with this, whichever is lower you have to take. I'll move to group B. 2 and
Sir,
oh,
what if one
what is?
what if the first item had net realization value high and the second item's total cost was high? Sorry, third item.
That's why we're going individually, no? We are seeing individually which is lower.
Okay, sir.
Okay, suppose this one, like you're saying, item number 3, what if it was 50,000 cost?
Yes, sir. Got it, sir.
Then you must take NRV.
Okay, okay.
Whichever is lower, you should take.
Okay, sir.
Okay. Now, item 2. 200 into 200. 40,000. Then 400 into 250. So 1 lakh. NRV. $200 minus 10%. So that will be
180.
180 into 100. 180 200, sorry. That will be 36,000. Second one, they are saying 290 minus 10%. How much is that? 261
1.
into 400.
1,04,400.
Now, between 40 and 36, which is lower? 36. Correct?
Yes.
Between 1 lakh and 1 lakh 400?
1 lakh.
1 lakh. All right? I'll put a total to all these 4. So value of inventory on item by item basis is equal to 55,000 plus 1,36,000, which is
1,91,000.
1,91,000 under group by group method. You have to find the total here, 55,000. Here it is, 58,800. Okay. So, and this one would be 1,40,000. And this one would be 1,40,400.
4,400.
So here I will take 55 plus 1,40,000. 1,95,000. There is a variation in the method. As per S2, it is this one, 1,91,000. Is this clear?
So why will there be a difference, sir?
Because you are following a group method, not individually.
Okay, just because of the difference in methods, we get a difference in answer.
Yeah, definitely a different answer. Okay. Is this clear? I'll move on. The next question that we have to solve from our material given to you, then I'll solve some other questions. There was a question sent by somebody, I'll solve that also. All right, here's a May 19 question that I would like to solve now. We haven't solved this, no?
No, no.
Chris, are you there?
Yes, sir.
Please read.
Yeah. Raj Limited prepared their accounts. Financial year ended on 31st March 2019. Due to unavoidable circumstances, actual stock has been taken on 10th April 2019. When it was ascertained at 1,25,000, it has been found that point one, sales are entered in the sales book on the day of dispatch and return inwards in the returns inwards book on the day of the goods received back. Purchases are entered in the purchase book on the day the invoices are received. Sales between 1st April 2019 to 9th April 2019 amounting to rupees 20,000 as per sales day book. Free samples for business promotion issued during 1st April 2019 to 9th April 2019 amounting to rupees 4,000 at cost. Purchases during 1st April 2019 to 9th April 2019 amounting to rupees 10,000, but goods amounts to 2,000 rupees not received till the date of stock taken. Invoices for goods purchased amounting to rupees 20,000 were entered on 28th March 2019, but the goods were not included in the stock. Rate of gross profit is 25% on stock. Ascertain the value of stock as on 31st March 2019.
All right, now what are we doing? We have been given the stock as on 10th April. But we want to know what was the stock on 31st of March. We go 10 days backwards. The stock on 10th April was 1,25,000. Okay. Now look at point number 3. You have made a sales in those 10 days of 20,000. If you had not made those sales, your goods would have increased. Okay. So I'll just show it to you here. One second. Just a minute, the pencil is acting funny. It's not letting me write. the value of stock as on 10th April was 1,25,000. We start from point number 3. The point number 3 says the sales between 1st April and 9th April were 20,000. If this sale was not made, your stock would have increased. Isn't it? I'll repeat, if the sale had not been made, the stock would have been increased. Just excuse me one minute. If the sale had not been made, the stock would have increased. So I will say less sales between 1st April and 9th April. What is the sales there? 20,000. Now sales is made at selling prices. So I remove the profit thereon. Profit margin is 25% on cost. Sales is in selling prices. So 25% on cost is how much on selling price?
20%.
20%.
20%. So 16,000 would be added, not less, sorry. Then free samples, 4,000 were given out. If they had not given out, it would have increased my stock. Okay. So add. How much are these? They are in cost, so there is no need of adjusting it.
4,000.
4,000. Purchases between 1st April and 9th April are 10,000, but goods of 2,000 was not received. So enough if you reduce 8,000. Okay. Invoices for goods purchased amounting to 20,000 were entered on 28th March, but the goods were not included in the stock. Invoices for goods purchased amounting to 20,000 were entered on 28th March 19, but the goods were not included. That's it. Okay. So we'll add that last item and then I'll reduce the purchases. So okay, this is one way of doing it. Yes.
Could this be solved using memorandum trading account just for
Yeah, the other way of doing it is For 10 days, he prepared a memorandum account. To opening stock is what I want to calculate. On 31st of March, I want to know what is this. So that would be the balancing figure. Okay. Two purchases. What is the purchases? 8,000.
10,000 less 2,000.
What is the sales during this period? The sales was 20,000. Then what else was there in that?
3 samples.
3 samples given. So
2 free
by
samples.
advertisement. Okay. And then so
Goods
here
not
is,
received.
sorry, that is
The
latest.
20,000 goods.
I'll come to that. I'll come to that. Gross profit. Now, closing stock is given. $1,25,000. So
Sorry, 8,000 is missing.
Sir, 20,000.
there's no entry for that. It is a entry was made, but we didn't include it in the stock. That's all. So that we're doing now. There cannot be a journal entry for that. No, that is fine. I see a question. What do you mean by sales part? This part, I have sold the goods. The selling price is 20,000. My valuation is on cost basis always. So I remove the gross profit and see how much cost of goods were sold. Is it
In a
okay?
statement form,
Yeah.
we consider what if the goods had not been sold and then to
Correct.
add or less.
Correct.
Okay, perfect.
We do the opposite. Purchase we less, sales we add.
Yes, yes. Thanks for the idea.
Yeah. Okay, this is the logic. Now, I have a question that was sent to me by WhatsApp by one of the students. I'll solve that. If my memory serves me right, this is an examination question. Is it visible?
Yes, sir.
There is a question. We are adding to stock which we purchased, whether it is there or not with us at the time of valuation. Yes, ma, because the goods in transit also belongs to us, no? Like they are not there. But suppose the goods catches fire, whose loss is it? I have already bought, so it is my loss. So the goods are mine. Whether they lying with me or lying somewhere else, but they are mine. Am I the owner of that goods? That is important. But
Okay,
good
sir.
question. Okay. I hope you understood the question. Other guys, the question was, even if the goods are not with me, I should take it to stock. Is it? Yes, because the goods belong to me. The moment I have purchased, I am the owner. So whether it is in transit or whether it is in the consignee or whether it is a sale or return customer, it belongs to me. Okay. Kritika, please read this question, ma.
Yes, sir. The profit and loss account of Hanuman showed a net profit of rupees 6 lakhs after considering the closing stock of rupees 3,75,000 on 31st March 2016. Consequently, the following information was obtained from scrutiny of the books. First, purchases for the year included rupees 15,000 paid for new electric fittings for the shop. Hanuman gave away goods valued at rupees 40,000 as free sample for which no entry was made in the books of accounts. Invoices for goods amounting to rupees 2,50,000 have been entered on 27th March 2016, but goods sold were not included in stock. In March 2016, goods of rupees 2 lakh sold and delivered were taken in the sales for April 2016. Goods costing rupees 75,000 was on sale or return in March 2016 at a margin of profit of 33.5% on cost. Though approval was given in April 2016, these were taken as sales for 2016. Calculate the value of stock on 31st March 2016 and the adjusted net profit for the year ended on that date.
Thank you. Now, when you get a question like this, don't think of all the transactions together. You go point by point. Okay? One step at a time, always. All right? Because most of us make a mistake because think of the next point in this point also. So learn to focus on the point on which you are dealing with. The objective of this question is to find out what is the correct profit. Okay? You can do this question either on a statement form or you can use a ledger account, whichever you want. I will solve in both the ways. Okay? So let's start. I will first start with the statement form. What is the question? Calculate the value of stock on 31st of March 2016 and the adjusted net profit as on that date. Okay. So first I will say we have been told that while valuing the stock, we found it at 3,75,000. Now, purchases for the year included 15,000 paid for new electrical fittings. So it doesn't come in your stock anyway. We have not taken it. We did a physical stock, we got 3,75,000. So this will not come in my stock. Okay. The second one, Hanuman gave away 40,000 as free samples for which no entry was made. Again, this will affect only the profit, not the stock. Imagine, you took a stock on 31st of March. This 40,000 was not there in the stock when you took the stock. It was given to customers as free samples. So it doesn't affect your stock position. It was not there, it shouldn't have been there also. Profit, yes, we'll come to that little later. Invoices for goods amounted to 250,000 have been entered, but the goods were not included. Just a few minutes back, we answered a question. If the goods are not there, also we should include, yes, because they belong to me. They are goods in transit. Okay. So I will say add purchases on 27th March not included in stock. I'll give an explanation for you. No, you're running the examination, but for you to understand, the goods are in transit and they belong to, who is this person? To Mr. Hanuman. All right. Then goods costing 75,000 were sent on sale or return at a margin of profit of 33,130 on cost. The approval was given on April 16, but on 31st March, to whom does the stock belong?
Their point
Was.
To the Mr. Hanuman only, no?
To the
What was
proprietor.
lying with the customer, it belongs to us. Okay. And the cost only is given, so don't go to adjust anything. Goods should be valued at cost. So, what is the total here?
7 lakhs. Sir.
7 lakhs, sir.
So what about the fourth one?
So sales,
One at a time. Fourth one. I have taken that fourth one. Wait. Fourth one.
You didn't
In
take it,
March,
sir.
wait. In March, goods of 2 lakhs sold and delivered were taken in the sales for April 16.
Add, no?
One second. In March 2016, okay, goods of 2 lakhs sold and delivered were taken in on sales of April. So when you took physical counting of the stock, was that stock in your premises?
No.
no,
No.
So when did you sell it actually?
March.
March itself.
March, okay.
You have taken it in the sales of April. That is a mistake. So it has been sold in March. Goods were not there. So good valuation is fine. You follow what I'm saying?
No, sir.
See, when I
Sir,
took,
can you,
yeah, I'll explain.
sir, can you,
Yeah, I'll explain. Now, on March 2016, we sold these goods. We delivered these goods. So these goods are not included in 3,75,000. Agreed?
Yes, sir.
Correct. The goods were taken as sales for April, but the actual sales was done in March itself, no? And we should not have included them in the closing stock, but they are not included also. So leave it as it is. Clear?
The transactions effect will be in the next accounting year, no?
The transaction was wrongly taken in the next accounting year. We will adjust that in our profit calculation. Don't worry. The sale should have been included in March itself. It shouldn't have been included in April. The sales was done actually in March. It should have been accounted in March itself. But it has been accounted for in April. We'll correct that. Stock position, there is no problem. The stock was not there in March. We didn't include it also. So it's fine. On 31st of March, we didn't include it. What's the doubt? In statement answers, the adjustment that adds the value of the stock was done first, not necessarily. You can do one add, then less, then add, then less also. No problem. No problem at all. Another, yeah, adjusted net profit. Correct, correct. You want me to give a note on this? Okay? You want me to give a note on that time? On this, do you want me to give a note? Yes or no? Or have you understood?
Understood, sir.
Very good. Now, I will prepare the next part. They want to know what is the adjusted net profit. Okay? The profit is given as 6 lakhs. Okay. Just one sec. Profit as per profit and loss given is 6 lakhs. Now we will go through each item and understand its effect on stock, on the profit. Okay. But before I do that, please make sure that you understand opening stock decreases the profit. Closing stock increases the profit. Did you understand that point?
Yes,
An
sir.
increase in opening stock decreases my profit. An increase in closing stock increases my profit. Is that clear? Keep that indicator in mind and then we'll approach each point then. First point. Purchases for goods included 15,000 paid for new electrical fittings. Is purchase an expense or income?
Expense.
Expense. You increase that expense by showing electrical fittings also. Electrical fittings should go to balance sheet. So your purchase was taken more. If your purchase is taken more, what happens to the profit?
It decreases.
It
Decreases.
So we'll reverse that. Now we will say add. Purchase of electrical fittings. Yeah. Purchase of electrical fittings. What is the value?
15,000.
15,000.
Add or less. Pratik, I can put add or bracket less there itself. You understand? Okay, you don't have to write add first, less afterwards, nothing like that. Next, Hanuman gave away goods of 40,000 as free samples for which no entry was made. Now, when you give away goods as free samples, what is the journal entry that you pass?
Free sample account
Free samples to purchases.
purchases.
Advertisement to
Advertisement.
purchases. Okay, sales promotion to purchases. Clear? So, purchases was overstated. Correct? Profit should increase. But that again is expense, advertisement. So, profit should decrease. So, what should you do?
Decrease the profit.
We don't do anything. Because, see, purchases was taken as more, so you increase the profit. But advertisement is not shown, so you decrease the profit. Finished, no? The journal entry is advertisement to purchases. Advertisement comes in P&L account. Purchases comes in trading account. Of course, gross profit should be increased, but net profit should be decreased. Ultimately, effect is nil on the profit. Are you getting it?
Sir, sometimes free samples.
Your voice is breaking. Kindly type your question. Hello, listen to me. Listen.
What?
I can't hear you. Type the question. Your connection is very low. You have a connection problem. Type the question on chat.
Sir, you provide notes, sir. Would be great.
What is the value? Not sometimes, Suraksha. Every time we will reduce it from purchases whenever we give samples. But that same amount will be debited to the P&L account either as advertisement expense or sales promotion. So on the one side, you'll increase the profit, again you'll reduce it. So effect on the net profit is nil. Effect on gross profit, it increases the gross profit. Effect on net profit, nil. Are you following?
Sir,
Oh,
the electrical fittings is an expense, right, sir? So the profit should decrease, no?
electrical fitting is an asset. Fitting nothing.
Okay.
Okay, you are going to, if it is electrical expenses, then you are right.
Okay, sir.
Okay, I'll put that. That's a good point, Pratik. I wish you were a little more active in my classes like this also. You've got so much of brains, you make good observations. Thank you, bye. Thank you so much. Open for me. Just to clarify, I put that note also. But Pratik has made the correct observation. Any more doubts? Can I proceed? There is a chat. Let me see. There is a chat message. Yeah, no problem. Yes, sir. Thank you. Welcome. We'll go to the next point. The third point says invoices of goods amounting to 250,000 have been entered, but the goods were not included in the stock. So they have been entered, but they have not been included in stock. Means what? I should have, it is included in purchases, but it is not included in closing stock. So I should include in closing stock. If I include in closing stock, what happens to my profit?
Increases.
Very good. So, goods purchased not included in closing stock. What is the value, ma? Suraksha, what is the value?
Sir, question is not visible.
Oh, I'm so sorry. 250,000. You didn't take screenshot. Sorry. $250,000. Okay. Now, one more question. Goods costing 75,000 were sent on sale or return basis. So to whom does the stock belong?
Proprietor. Hanuman.
No, should be included in my closing stock, isn't it? 75,000.
20.
How much is the total, ma'am?
9,40,000.
So what about the gross profits of 33.5%?
That should be considered only when the sale price is given. Here they have said goods costing, no. So not to worry about it. Hey, we have to add one more point. I forgot. That sales point. Sale of goods wrongly taken in April.
2 lakh.
Oh.
I'm not wrong.
Yeah, if I add this now, what is the total?
11
lakh 40,000.
I think statement form is better. Okay, you'll get confused with the T form. This is correct way of doing it. You just understand it logically. This is enough. I don't want to confuse you with the T form again. Okay. Yes, Rachel, they have given us the GP margin to confuse us. GP margin is applied on the sales price. Okay. If they are told that goods were taken on a sale or return basis and the selling price was so much, then you apply the GP. Because they have done it like this, you have to understand. They are trying to confuse you. Don't get confused. You have to talk only about cost of goods. Okay, ma'am?
Yes, sir.
But right observation, don't worry. This had come in the foundation exam of 2000. So pay attention. Okay.
Sir,
So,
according to the textbook answer, there is a 1 lakh difference. Why is that?
textbook.
I mean, the material, sorry.
Hey.
The solution for this sum, no, has a 1 lakh difference. To adjusted net profit, the balance is 10 lakh 40,000.
Which is the question? Let me go to the question. Foundation. Study material, is it?
Yes, sir.
Inventory, early inventory, yeah. Okay. Which question?
4.25.
Huh?
Page 4.25. They have included advertisements here.
Hold on. Let me come to them. They cannot be totally wrong, but we will find out. 4.25. This one.
Next one. The one below that, yes.
That is the solution.
Yeah, but
they have taken it here also. Correct. They have done correct. They have taken here also. You see the credit side as samples and then debit side as advertisement. Both they have taken. So effect is nil.
then why is there a difference of 1 lakh, sir?
That is a good question. 6 lakhs is there, 15 is there, 40 is there, 2 lakh 50 is there. They are right. They are right. Let me come back to our question. Let's see. What is the wordings there? Goods costing 75,000 were sent on sale or return. We didn't. Oh, I made a mistake. See, when we send goods on sale or return basis, there are two things that we need to do. One, we need to reverse the sales made in this month, right? And then we need to add the value of the closing stock to our closing stock. The total sales of 75,000 was made. Now, what are the sales made? The cost is 75. So, what was the sales?
So 33.5% on 75,000.
Correct. I need to do that. Okay, so they're right. This time the institute is right. Okay, I made a mistake. I didn't pass that. I'll give you a working note for this also. Okay. Okay, I'll give a note here. Rachel, can you read what I'm writing?
Yes, sir.
Rachel, read.
Whenever there is any sale or return transaction on which approval is not received, two things need to be done. First thing is reverse the sales.
Continue, ma'am.
And second is add the cost of such goods lying with the customer to the closing stock.
Very good. Clear? Is my working note clear?
Why do we decrease? Can you tell the principal statement that you told in the beginning?
Sorry?
Why do you decrease the 1 lakh in profit?
Because sales will increase our profit, no? So if we reverse the sales, it will decrease the profit.
Yes, reversing is difficult.
See, we are doing one sum, but we're doing it very slowly and very deeply. Now, these concepts will come clear to your mind. So, when you try other questions, you'll be getting it very easily. Otherwise, this chapter is one, big chore. Agreed? Now, the concept will be much clearer to you. I have gone very slow. Is that right, Chris? Is the concept clearer?
Yes, sir. But this thing, sir, could you just explain the part on the why the actual debit was made, like 1 lakh debit? I mean, the less from the profits. I'm still a little bit confused, sir.
All right.
The reversal
See.
on that.
Okay. When you make the sale or return, somewhere in March first week, you made the sale or return. Okay, you made that transaction. That time you said debtors to sales. And where does sales come in a trading account? On the credit side. And because it comes on the credit side, it increases the profit. Now the sales never happened till 31st of March. In fact, it went on till the next month, April. Therefore, you need to reverse that sale. When you reverse the sale, that means you're reducing your sale. That means you're reducing the profit.
Understood, sir.
Right.
Thank you, sir.
Welcome. Anybody else, any doubt? Is there any other sum that you want me to do? If not, I will give you a sum. ಮಕ್ಕಳೇ, ಬೇರೆ ಏನಾದರೂ ಪ್ರಶ್ನೆ ಇದೆಯಾ? ಇನ್ನ ಭರದ್ವಾಜ್ ಸಂಶಯ ಉಂಟೋ?
ಇಲ್ಲ ಸರ್.
Okay, then I will do one question. Okay, I will ask you one question. Okay, I am going to add one question now. Please don't get a headache looking at the question, okay? Don't make judgments just looking at the question. Take it step by step. Cross the bridge as it comes is what I will strongly recommend. Listen. Are you there?
Yes, sir.
Could you please read?
A trader prepared his accounts on 31st March each year. Due to some unavoidable reasons, no stock taking could be possible till April 15, 2018, on which date the total cost of goods in his godown came to rupees 50,000. The following facts were established between 31st March and April 15, 2018. A. Sales rupees 41,000 including cash sales of rupees 10,000. Purchases of rupees 5,034 rupees including cash purchases of 1,990. Sales returns of rupees 1,000. On 15th March, goods of the sale value of rupees 10,000 were sent on sale or return basis to a customer. The period of approval being 4 weeks. He returned 40% of the goods on 10th April, approving the rest. The customer was billed on 16th April. The trader had received goods costing rupees 8,000 in March for sale on consignment basis. 20% of the goods had been sold by 31st March and another 50% by the 15th of April. These sales are not included in A above, in the sales of rupees 41,000. Goods are sold by the trader at a profit of rupees 20% on sales. You are required to ascertain the value of stock on hand as on 31st March 2018.
Okay, one by one. Okay. Now, I'll first do a rough working as I explained. Then you can change it into a full form by yourselves. You will do it. Okay. What is the question that you want? You want to know what is the closing stock on 31st March 2018. But what is the stock known to you? April 15th. Okay. So, memorandum. To opening stock. What is this? This is the answer I'm looking for. Balancing figure. Okay? Sales. Whether it is cash sales or credit sales, what is your problem? It is sales. Purchases. Is this clear?
Yes,
Sales
sir.
returns.
Yes, sir.
Sales returns. Sorry, I will reduce the sales returns now. Now be careful. Just listen. Okay? If you want, close your eyes, but listen. On 15th March, goods of the sale value of 10,000 were sent on a sale or return basis to a customer, the period of approval being 4 weeks. He returned 40% of the goods on 10th April, approving the rest. The customer was billed on 16th April. as on 31st of March, where are the goods? They are lying with the customer.
With the customer.
But to whom does these goods belong?
The proprietor.
Proprietor. Okay. Therefore, when I take closing stock, I have been told that the closing stock is 50,000. I will add cost of goods lying with sale or return customers. How much is the cost of goods? 10,000. No, not 10,000.
So can we do it as a working note down?
Yeah, I'll do that.
Okay.
15th March, 10,000 sent on sale or return basis. He has 4 weeks time. He returned 40% on 10th April afterwards only. So on 31st March, it is 10,000, but sale value, I cannot take sale value, okay? What is the GP? 20%. So I should take only 8,000. Okay. Next point. Point number E. The trader had received goods costing 8,000 for sale on consignment basis. So who is the trader now?
The consignee.
He is consigning. Do the goods belong to him?
No.
No. He cannot include these goods belong to him. But while valuing these goods, we include these goods also. So we will remove it. Okay. 20% were sold and 50 were sold. So as on 16th April, 30% is remaining. I'll give you notes for this, both of these items, okay? Value of stock as on 15th April this includes the customer returned 40% on 10th April, but 60% came only on 16th April and the valuation took place on 15th April. Okay, this includes the approval of 60% of goods on 16th April. Okay, the total sale or return, forget this point please, okay, I'm not going to consider this now. I'll come to this little later. Now, the total sale or return is how much? 10,000 less 40% return. This happened on 10th April. Okay, so 4,000. Balance 6,000. Okay. Now this 4,000 is there in this 50,000 closing stock, so not to worry. Okay, the stock is already included. But this 6,000 is not yet included. Okay, balance is 6,000 less gross profit. What is the gross profit? 20%. So 1,200. So 4,800 should be included in stock. Only 4,800 should be included in stock. So I will say add sale or return, working note 1, 4,800. I'll explain again. Just listen. We are trying to find out what is the closing stock on 31st March. And we are doing that by looking at the stock as on 15th April. Correct? A little while ago, I told you, when there is a sale or return, you need to do two things. One, you need to reverse the sale, and two, you need to add the cost of goods lying with the customer to your closing stock. We sold 10,000 sale value to our customer. 4,000 he returned, and we have included that in the stock of April 15th. So that is not a tension. You don't need to adjust that at all. But in the balance 6,000 sale value, 20% included gross profit, 4,800 is the stock lying with the customer on 15th April. 16th he returned it. So I need to add 4,800. Is that clear? I am not adding the entire 10,000 because the valuation is as on April 15th. Before that he had returned 4,000. So that cancels out. We don't have to deduct anything from the sales, Rachel, because we are not trying to find the profit. We are trying to find the value of stock as on 31st of March. In the previous problem, we are trying to find out the profit. Now you just want to know what is the stock that you own on 31st of March. Is that clear?
Yes, sir. So it won't make a difference if the sales amount will differ.
No. I only want to find out the cost of the goods as on 31st of March.
Yes, sir.
Okay. Now I come to consignment also. The trader is holding the goods in the capacity of the consignee. Since he is not the owner, he should not have taken the same in closing stock. Therefore, we reduce it from closing stock. How much do you want to reduce? We'll find out. 8,000, 20% and 50% were sold, so balance is 30%. So I will reduce 2,000 Can you do the difference now?
42,800.
How much? $50 plus 4,800 minus 2,400.
Oh, yes, sir.
Yeah. Gross profit 40,000 into 20%, 8,000. So what is the balancing figure? Can somebody tell me the balance?
79,366.
That's it. Will you please try this sum also by yourself?
So where did we get the 40,000 from?
Sales, less returns.
Yeah, sorry, got it. Sorry.
At the end, the consignment part, 8,000 minus 20% minus 50% again. What is that?
See, you read that line. 8,000 was sent on consignment by the consignor. 20% we sold on 31st March. 50% we sold on 15th March. So how much is remaining with you?
Okay,
Balance remaining is 70%, 30%.
Okay, so that's not the calculation that I just said.
So,
Yeah.
if there is any sale made on consignment, then the sale will be added to the proprietor's sales, right?
No.
Okay.
Only commission is added to the income.
Okay.
Okay, sales is not added because if you are a consignee, okay, and you are making the sale, what is the journal entry you will pass? You're making it for cash.
Cash account data to sales.
Cash account data to consignor's account. It is not your money.
Directly, yeah.
It is his money you are collecting, no?
Okay.
What are you entitled for? Only commission. All right. Okay. You will say consignor's account data to commission.
Okay,
Clear?
sir. Got it. Thank you.
Welcome.
Sir, sale value 40,000 rupees. Shouldn't we consider the cost of the goods?
Yeah, that's why I put 8,000 gross profit on debit side.
Okay.
Absolutely right.
We can directly put 32,000 here, right, sir?
Then don't write 8,000 on this side.
Okay.
Done. All right, I will give you one more sum.
The sale profit is that you deduct the gross profit this side, no?
I'm sorry?
The sale profit, you have deducted this side, no? The same thing, no?
I can't hear. There's a lot of disturbance. Your voice is cracking. Can you type out your answer? Zishan. Chal baba. Zishan, what were you saying? Jason Mone.
Sir, could you show the first two answers of today's sums? I will take a screenshot of it, the whole thing, along with
Question
the
you have?
question.
Okay, you want only
I
the
have it,
answer.
but it will be in sequence. No, with the question. It will bring. No, first question and then answer. Small screen, sir.
This one also?
Yeah. My phone got crashed.
I'll just send this now only. Now only I'll send it by the group. In PDF, I'll put in the group now only.
You'll upload it?
Yeah, just now. After this class, I'll put it in half an hour.
Oh, all right. That will be great. Thank you.
Before I go home, I'll do that and go. Okay?
Yeah.
All right. Arhan,
Yes, sir.
read.
The financial year of Shri X ends on 1st March 2018, but the stock in hand was physically verified only on 7th April. You are requested to determine the value of closing stock at cost as on 31st March from the following information. A. The stock valued at cost as verified on 7th April was rupees 15,000. Sales have been entered in the sales day book only after the dispatch of goods and sales return, only on receipts of goods. Purchases have been entered in the purchase day book on receipt of the purchase invoice, irrespective of the date of receipt of goods. Sales as per the sales day book for the period 1st April to 7th April, before the actual verification amounted to rupees 6,000, of which goods of the sale value of rupees 1,000 had not been delivered at the time of verification. Purchases as per the purchase day book for the period 1st April to 7th April before the actual verification amounted to rupees 6,000, of which goods of purchase of rupees 1,500 had not been received at the date of verification, and goods for purchase of rupees 2,000 had been received prior to 31st March. In respect of goods consisting rupees 5,000 received prior to 31st March, invoices had not been received up to date of verification of stocks. The gross profit is 5% on sales.
Eight o'clock, I'm in class. We did a similar some little while ago. 10 minutes. Try to solve by yourself. Then I'll give you the answer. Come on, try by yourself first. Take screenshot.
Sir,
Ah,
in the second adjustment given here,
yeah.
purchases have been entered in purchase day book on receipt on the purchases on the invoice, irrespective of date of receipt is given.
Yeah. So you have entered the purchase book on the date of purchase invoice, whether you received the goods or not, no? So you have not yet entered because the invoices were not received also, but you have included the goods. The goods were received, invoices were not received.
Okay, sir.
Invoices will come only in April.
Okay. Which means it's a mistake there, right?
It is a mistake in recording. So we have to change that mistake.
Yes, thank you.
A little confusing, no? I mean, you're right. See, interpretation can be different. So you make your assumption clear, whatever you're doing. Okay. So if there's any chance of your interpretation also can be considered, they will give marks. You follow?
Yes, sir.
Make, along with the solutions, make your assumptions very clear. But focus and do it. Do it slowly, one step at a time. Practice, you will get it. Can we stop for today?
Yes, sir.
Tomorrow I will do that accommodation bill part. I mean, not what? Account current part. 3 sums people want me to do. So I'll do those 3 sums. 3 different methods, one sum each. Okay?
Yes, sir. Perfect.
Thank you.
Thank you, sir.
Thank you, sir.
Right.
Thank you, sir.
Welcome.
Good day
Welcome.
to you.
Welcome. You too. You too. Zishan, sorry, not Zishan. Nidal. Nidal?
Yes, sir.
I'm mailing it to you. You put it in the group. Refresher group.
Okay, sir.
What is your email ID?
Nidal, Nidal, Arabia.
Nidal Arabia. Appa.
At gmail.com. Sir, long time, sir, email ID.
I know.
Thank you, sir. Bye, sir.
Thank you so much, sir. Sir, are you uploading the recordings also?
I'm sorry?
The recordings of the previous class and today's class.
This will be uploaded, definitely uploaded tomorrow. Okay? Definitely.
Yeah, sir. Would be great. Would be helpful.
Thank you. Thank you.
So what about the 2000 in E adjustment? Sir?
Well,
EE adjustment. What about the 2000?
that was already received, CE. And the goods of 2000 have been received prior to 31st of March. You got the goods, but the invoice did not come. That is that purchase only. You did not get the goods, you don't get the invoice also. That is this month's purchase.
So that 2000 must be subtracted from 4500, right, sir?
No, it is already included there, no, in the goods. You're saying April 10th, that goods also is there.